All right. Good evening, everyone. Welcome to this evening's presentation on the ABCs of credit scores, presented by First Home Alliance and Executive Director Larry Laws. I'm going to talk to you a little bit in short about First Home Alliance and what we are and what we represent. First Home Alliance is a 501c3 nonprofit housing counseling agency. What we do is we promote financial literacy and economic self-sufficiency. Our primary mission is to increase home ownership among low to moderate income communities and assist present homeowners sustain home ownership through loss mitigation counseling and foreclosure intervention. We have a great staff on hand that can help you with any type of virtual search services we have. And I'm gonna pass it over to Nate so he can talk to you a bit in brief about our virtual services.
Perfect. Guys, hello, welcome again. Thank you all for coming out to the webinar. What you're looking right there is our team. Go back to that last slide for me. What you're looking right there is our team here at First Home Alliance. First, you heard Vinny, he was speaking. He's our program assistant with media, but he also is our intake specialist. I mean, Vinny pretty much does everything that there is to do. So if you want to come in and with the housing counseling agency, Vinny's the person you want to talk to. You're going to some way meet with him in the beginning portions of that. So he's a good person to know. Add him on Facebook too, and then bug him if you want. The next one is, of course, Charlene. And Charlene is our senior housing counselor. She does, of course, loss mitigation. She also helps a lot of folks with first-time home buying. And also she's really good at helping people with financial recovery and understand just some basic budgeting principles as well. Of course, we have George, who's our Spanish speaking. He helps also with our translation. And then, of course, we have our, I believe, Ann, right, is our certified mortgage, reverse mortgage person. And we're very proud that she's on board as well. And then, of course, I'm a certified housing counselor as well, and I run the financial recovery side.
All right, our virtual services that we have still going on throughout the midst of COVID-19. We are still open and still helping the community, but we are doing everything via virtually as of now. We still have virtual services in reference to home purchase and counseling education, mortgage assistance, loss mitigation, foreclosure prevention and counseling. Son Hutchinson also is helping out with our reverse mortgage counseling. We have Nathan that's doing a lot of our emergency preparedness planning and financial recovery counseling. Household budgeting, financial management, credit improvement, rental counseling, online home buyer education, ehomeamerican.org, and First Home Alliance. Like I said, everything that we were doing before the COVID-19, we are still actively participating in bringing to the community now. Just everything is via virtual. So still go to firsthomealliance.org, go to the intake tab and get started on service. I will be the intake specialist and I help guide you along the way to get started with services.
Perfect. And before we keep going, I want to just do another quick introduction and do our introduction for our speaker. And I missed that earlier, but Larry Laws is not only our executive director, but he's also the one who's going to be presenting to us today. And if you want to see, can you go back to that last slide for me, Benny? Just to give you an idea of what we've done here and what he's been able to do as the founder of First Home Alliance. We've been able to, just last year alone, we served 934 households. 334 received financial literacy and education. 180 received some type of home ownership education, and 79 people avoided foreclosure. And of course, we've served over 120 people in our military. So just alone our accomplishments and what we're going into 2020 with is really at a lot of the soul or at the helm is our speaker for tonight, which is Mr. Larry Laws. We are in a HUD approved nonprofit housing counseling agency, and we've been training over 11,000 individuals and families and helping over 5,000 people become successful homeowners. So we've got your speaker tonight has a little experience under his belt when we're talking about, especially when we're talking about credit scores. One of the things he believes is that there's just one thing that stands in the distance of you reaching your financial goals, and that is having a simple plan. And he's going to talk a lot about the ABCs of credit today, but as we're doing that, I encourage you to kind of start jotting down your credit repair or your credit understanding and just start making up a simple plan, and ask him as many questions as you can, because he's a wealth of knowledge. And as he presents the rest of his material, I want you to also kind of take note how he's able to take some of the complex things like credit and keep them real simple for you. Okay, so he's going to be sharing these easy tips for you to how to build and maintain good credit. And if you follow them, you'll be able to improve your credit and be well on your way to achieving your financial goals. The last thing I'm going to say is that I want to welcome Larry Laws, but if you can, just share this with your friends, because somebody on your page might need this information, and let us know you're sharing this so we can say thank you and maybe send you a gift package of, a hearty handshake and a virtual hug. But there's one person that I know that will understand something about that. Mr. Larry Laws is going to come on. Thank you so much for joining us. And here we go with the ABCs of credit.
Okay. Thank you, Nathan. And thanks. Welcome to our class today on the ABCs of credit scores. All right. And so I'm gonna we're gonna cover basically 5 topics, 5 major areas here with the ABCs of credit. And some of those topics we're gonna discuss the credit reporting agencies. We're gonna talk about understanding a credit report. We're going to talk a lot about the credit scoring, and I would like some feedback on that for the audience here. If you have questions, please drop those in the comment so that we can address those, and about credit scoring, and give you some hints, some tips, basically improving your credit, and also safeguarding. And what I would like to do is just at the end there a little bit about safeguarding, but actually just bring up some things that are in the forefront now in reference to what's individuals are facing during the COVID-19 pandemic, and some of the things that you should be doing in reference to your credit to ensure that you continue to not only just maintain your credit, but improve it going forward. Okay, and so about credit scores. Some may ask, what is a good credit score? Well, there's actually a number, and we'll get to that number, basically about a good credit score. But we would like for you to not get hung up so much on the score itself, but actually on basically having good credit. Good credit, it means a lot. Credit has been around forever. Back in the days before we actually had scores and these models and apps to keep us entertained, credit was basically your reputation. And so if you was basically a farmer and you needed seed to plant your garden or your farm, well, you actually, if you went to the feed store to get seed, it basically, what's your last name? Or what's your history of repaying your debt in the past? And that would basically serve how much credit you would get in advance. And so basically credit is basically getting the item now and actually paying it later. And so that is basically credit. And so you build credit like you build reputation. So keep that in mind. It's not all about score, but it is about having a good credit. And so we will talk about a score. And actually a good score would be, if you max out a good score, we would say a good score is about 720. So remember, that would be and is a very good score of 720. Now, in reference to these ABCs, and I try to make it very simple, when you're trying to build credit, maintain credit, it's very simple. May have mentioned I'm retired out of the military, but in the military, we make things simple. I'm Army, of course. And so it's 1, 2, 3, 4, so if it's more than 4 steps, it's probably too complex, break it down and make it very simple, something that you can remember. And so I broke these steps down in reference to maintaining, building, and building credit and restoring credit. Is simple ABC. Very similar to your life-saving steps: clear the airways, stop the bleeding, check for shock, dress the wound. And so in reference to credit, just simple A, B, and C. If you can remember those A, B, and C to your first response of building credit, restoring credit, and maintaining credit, you will have a good credit history. 1A, always pay your bills on time. Very simple. Always pay bills on time. B is balanced credit usage. And we'll be talking about different things of how you balance that use of credit. And C is check credit annually. And we're going to, on this time, at the end of this session here, as we're going through this pandemic, I would like you to think that C, not just check credit annually, you want to check it as often as you can. And we'll tell you how you can actually check your credit history and some scores on a weekly basis. Don't get hung up too much on the score. Think about your history, but actually check your credit weekly during this pandemic. Let's go and start talking about some of these, so a little bit of history and where credit actually generated. Why do we have credit scores? What is FICO? I have a poll question here, and so I would like to just take a few seconds here for you to answer the poll question. That poll question is coming up for those guys on the Zoom. You'll be able to see the poll question. For you guys on Facebook that are live, that question is, how many credit reporting agencies are there? And so we'll give you a few seconds to answer that question. So Vinny, the poll, is it completed?
We had 2 out of 5 people respond, 40% voted, and they picked option number 2, which was 3.
Okay, all right, and I'm quite sure the Facebook fans out there was able to get the same answer. Actually, the true answer is 3. There's 3 credit reporting agencies. Those agencies are Experian, TransUnion, and Equifax. Some may ask, why do you have 3? Well, my quick answer would be, you want it to be fair and you want diversity. Well, other may ask, why is the scores are different? Do they score credit the same? No, they use different models. And if they all did the same work, then you wouldn't need 3. You would only need 1. So 1, yes, there's multiple credit reported agencies, and their scores they use different models, so you do different scores. Now, credit consumer may have listed that you get a free copy. I'll consider talking about this free copy of credit report. One, you can get it annually. Since 2003, with the Fair and Accurate Credit Transaction Act, what was passed, is allow us to get a free credit report. And so you can get that annually from the 3 bureaus. You can also get a free credit report if you're ever denied credit. If you deny credit from basically asking someone to extend your line of credit and you're denied, then they can actually give you that report, that the source that they use to make their decision. Also, if you denied employment and also insurance, any of those that you denied, you can actually request a copy of the credit report, and they will actually give you the source where they got it from, and then you contact the bureau or the credit reporting agency, and they'll send you a copy of that report. So again, there's 3 agencies: Experian, TransUnion, and Equifax. Now, on this credit report, I'm going to cover, and this is if you have your credit report with you, we'll go through these 5 different areas of the credit report very briefly. I'm just going to mention these sections and what are in the sections, but if you actually have your credit report, it will help if you actually identify these areas on the report, and each time that you view that report, you'll be able to understand what's in those particular areas. The first area is the personal information. Why this is important for you to actually review on a weekly basis. And once you get it defined to the way that it should read, no inaccuracies are removed and is corrected, then it's very easy for you to breeze and make sure that information has not changed. That's the personal information. I would like for you to pay attention to, when you're doing applications for credit, to be consistent in reference to how do you write your name. Was the first name, middle initial, or if it's the middle name, be consistent with that. The more inconsistent you are, the better chance that there could be some type of fraud or misuse of your credit. And so ensure that you are very consistent in reference to putting your personal information. So the first section is personal information. The next section is the public information. Public information is a lot of information show up in this area. This area could be whether there's an eviction if there's, it could be in this public information. And remind you, the report, there's very many reasons why insurance companies, employees, potential landlords pull the credit, and it's not always about the score. Sometimes it's about that public information there that is valuable for them in making a decision to whether it's extending, not necessarily extending credit all the time, but sometime whether to allow you to be a tenant. The next area is the collection accounts. The collection accounts basically are the list of accounts that you have, individuals have extended credit to you. Those collection accounts, if you see duplicates, pay very close attention to the duplicates. A lot of times the duplicates are because the account is basically reported to the different reporting agencies. So one agency may report it on a report once, and it may be a different account number. Maybe if it's only one digit less than the other one, sometime it would show up again with the other agency reporting an extended number. But if it is a duplicate per se, that account has been counted twice on your report, that is something that you want to be aware of. And so collection accounts, that is a very strong area to pay attention to ensure that they are yours, and also that it's reporting those accounts being paid. The next account is the creditor information. And if you need to contact your creditor for any reason in reference to correcting information on your report, then that information to contact that creditor is on the report, and you're able to get in contact with the creditor and ask any questions or have any inaccuracies corrected. And the last area of the credit report is the inquiries. Inquiries basically are, you have promotional inquiries, but you also have inquiries in reference to someone is trying to extend credit or to you, which those are hard inquiries. The inquiries are on your report for 2 years. And so again, it's very important for you to check the report, know that they are, and also be aware of the inquiries that shows up on your report. If they're not a promotional inquiry or annual review on an inquiry, you want to maybe inquire about the inquiry if it was one that someone has requested a line of credit or credit to be extended to them and it wasn't due. And so again, the inquiries are very important to keep note of. Okay, I wanted to just take a short break here and actually see if we have any questions in reference to what actually show up on that credit report. Any questions?
Yeah, Larry, I have a quick question here. So you talked about being consistent with your name. What if I'm a junior and there's a senior and there may be a third? Will that affect how my credit is pooled, or will that have any kind of bearings on if they're reporting properly on me?
Well, if it's been reported properly, because the points that are used to pull your credit in reference to not only your name, the way it's spelled, but also the address and your social security number. And so it should be aligned that your credit should be your credit. That do not say that it cannot happen. And just personal experience, I have a junior. And actually, and so it's been 30 years, and so over 30 years, and haven't seen the cross on his credit on mine in reference to the reporting. Now, accounts at certain creditors, I have seen that they have had some duplicates or crossover in that junior, senior on other outside the reporting bureau. But yes.
And my second question is, can I choose which model of credit scoring I want someone to use when they're pulling it?
No, you cannot. Especially if you're speaking of mortgage. And so, of course, they use the latest model. And in reference to mortgages, they're going to be using the FICO scoring module. And so, no, you would not be able to choose in reference to the creditor, the person extending you the credit, which model they use. Okay. All right. Okay, and so speaking of that, the different models, these are two of the major models, and each of them have different versions, you know, in reference to the versions that may be used. You have the Vantage, and you also have FICO. A little bit of history on FICO. It actually was the Fair Isaac. It came from Fair Isaac back when I guess the United States was trying to come up with some system of being able to extend credit that would, I would say, not be biased in reference to making a decision. And so there was a mathematician, Bill Fair and Earl Isaac, that had presented this model to the U.S. government back in 1956. And so that's where FICO came from, actually the Fair Isaac company that designed that model. And FICO is a model that we've been using, and actually very right now we do not want to stop using that model in reference to mortgages. Some of the other creditors are beginning to look at and use the Vantage, but in reference to your mortgages lenders, they are primarily using the FICO model and the FICO scores. Okay, and yes, these two models are different. They use different points basically and how they derive at those scores from the analytics that is used to come up with those scores, and they have different ranges. The basic range for the FICO model, it ranged from 300 to 850. And a little bit just my personal experience in reference to that FICO score and seeing scores that are very, some that are good and some that is not as good. And speaking of actually, and we'll go into, I'll just go ahead and mention about that credit usage and the types of credit, whether it's revolving credit, installment, and also I would mention real estate. The scores that I've seen in the high 800s or the high to the mid 800s, 810, 820, individuals that actually had a good mix of use of credit, but also had real estate. Okay, and so that's just a point there. With the FICO model is a larger range, and that score, I've seen that score move quite a bit. At one point, it was about 250 up to about 900, but I've actually seen FICO model scores that are even higher. And so the FICO model, seen scores that actually go over close to score models over 980. And I think the max on that from the information I'm given, it will go up to 990 on some of the, I said FICO, I'm sorry, Vantage, on the Vantage score. The Vantage scores do tend to be a little bit higher. And again, the Vantage score, I'm gonna give you a range of anywhere from 250 all the way to about 990, depending on the Vantage score model. Okay, any more questions on the Vantage or FICO score? Okay, I'm going to take a break here and give you a minute or so to answer our next poll question. The next poll question is, what is a good credit score? A good credit score. I wish it was in a classroom. Then I could give out give out prizes for individuals that was giving these answers. So, so please participate in that. And so we're Facebook Live. If you would like to, you can actually put your answer into the comment. And if you're on Zoom, of course, you want to answer the Zoom poll.
We take Cash App.
Take Cash App. Okay. Yes.
I think we locked in with everyone on Zoom with their answers.
Okay.
All right. We have one person locked in at 810, one person locked in at 650, and we have two that locked in at 720.
Right. You guys coming up with some good answers there. Okay. And so actually, I mentioned early during the session in reference to a good credit score. And so a good credit score would be 720. And that is D720 for a good credit score. All right. And so let's get into this model. And so we're going to talk about this scoring model and basically what make up this score. And what I would like to do is actually use this model here. It's a lot of colors here, and to help you out in reference to the things that you can do to impact that score. The first area that impact the area of your score, the most of your score, is the amount that is your payment history. The payment history makes up 35% of your score. When I mentioned ABCs and paying your bills on time, this history, that's your reputation. That's your behavior in reference to when a bill is due, you actually pay it. So that behavior in reference to paying bills on time impacts your score the most. This is the same if you was actually establishing credit. This is your first credit. You're trying to establish a good history. Paying the bill on time is very important. It's the same if you're maintaining credit. You're trying to make sure that your credit score stay where it's at. Pay the bills on time. And it's the same if you're restoring credit. If you demolish your credit, it is at the basement and you're trying to raise your credit score. The best thing that you can do is pay the bills on time. And so always pay bills on time. Payment history is the most important and gives you the most impact on that score. The next area in reference to the key to help you maintain credit and build credit will be the amount owed. This amount owed, basically you want to keep it, one is if you're looking at the revolving credit lines, you want to keep it below 30%. But the amount owed on all your credit lines of credit or credit that is extended to you, this impacts your score 30%. So 30% of the score is on the amount owed. So paying that bill down would actually cause your score to increase. The next area is the length of credit. The length of credit is 15% of the score. And so one is, do not close accounts just because they are paid off. Those lines of credit, those credit lines that are good credit lines, but any credit line is actually allowing you to have more available credit. And the more available credit you have, of course, that will lower your score based on the percentage of usage, but also that long credit history. The longer the account that has been open, the more it impacts your score positively by having long credit lines, the length of time that the credit is open. Of course, each time that you open up a new line, and which goes into the next area, where it's 10%, is new credit, it counts for 10%. And so even open up a new credit line, which you need lines of credit, opening up a new credit will impact your score negatively, usually over a short amount of time. As long as that the credit that you've been extended, you continue to pay it on time. But open up new credit do impact your score negatively in the beginning. And so do not open credit unless it's necessary. And if you're planning on making a major purchase, such as a house, then you want to give a long time before actually requesting to have new credit, such as maybe even a year before purchasing a home. Do not finance any major purchase. I do not make any finances prior to purchasing a home within a year. And again, we also ask that, if you're speaking with a loan originator, a loan officer, is that ensure that you're getting good guidance in reference to when you're pursuing that home ownership. And in the pursuit of that, talk to a housing counselor in reference to the things that you can do or not do to impact your credit. And then the last area is the type of credit. We talked about installment We talked about revolving, and we also talked about real estate. And so the types of credit, you need to make sure that you have a good mix of types of credit so that it would impact your score and impact it positively. I'm open now for any question you may have on this key.
Yeah, Don chimed in and said in reference to credit reports, he mentioned usually mortgage or auto-related financing prefer FICO reporting. Non-lien type retail purchases prefer the more liberal reporting.
Was there a question? I'm sorry.
I think it was just a statement Don made.
Okay, if you can form it to a question, I'm better. Yes, yes. Yes. Go ahead and make that statement again. I was waiting for a question. Go ahead.
In reference to credit reports, he'd like to mention usually mortgage or auto-related financing prefer FICO reporting. Non-lien type retail purchases prefer the more liberal reporting.
Okay. All right. Yes. And so basically, I think it was some of the information that was put out earlier in reference to the different models. We did mention, I did particularly talk about the mortgage loan that the FICO score would be used. And so, yes, some of the other lines of credit, that is true, Don, that they may use a Vantage model. And of course, these models are, the Vantage model is new. It's a new tool. And of course, there's some that would like for us to use that because they say, oh, you got a higher number. They think the higher number is more impressive. But yes, mortgage will use the FICO model. Okay. Yes.
I say, for instance, an individual has a credit card. And how often is that credit card holder able to make a hard inquiry on the individual's credit line while they're paying on their bill?
There's, in most cases, there's an annual review.
Okay.
Annual review. But however, periodically, I think on some of the credit cards, you may get a biannual review. And a review of that credit. And so you have given them authorization to actually do an inquiry. And so in reference to the agreement that you sign for that extending the credit. And so it would probably be in the fine print as to how often it would be reviewed based on the creditor himself. But normally it is an annual review.
And also, I believe most time it's a soft pull, right? More like a promotional soft pull. So it shouldn't be a hard pull that they're constantly doing.
That is correct. It is an inquiry, and so it's not a request to extend credit. So you're not extend. Now maybe if it was a case where you were transitioning from one account to another, such as I have a revolving credit, but now I would like a installment loan to, and so the creditor say, yes, I know you've had your account here for a number of years, but now you're asking for a different type of a loan, and so that could be a hard pull if you're asking for a different type of loan. But most inquiries with a promotional or annual review, they are soft pulls. And also, speaking of soft pulls, with nonprofits, and so housing counseling agencies, educational purposes are for counseling. Those are soft pulls and not hard pulls. You're not requesting to have your any credit line extended to you. It's not a loan, and so those pulls are not a hard pull. Okay. Okay. Any other questions? All right. And I did see some on I wasn't tracking too fast here on the Facebook Live. I will make sure that I try to go over here and see if I have any questions. Okay, it says, will credit, this question comes from, I won't mention the name, but unless she send me a quote and say, yes, it's okay to mention the name. But it says, will credit score be affected if you take out a loan using your vehicle or money in an account as collateral on the loan for the lien? Credit using your vehicle as collateral. Most lending institutions are, if they pull your credit, it's gonna affect your score. Even if there's collateral, such as a vehicle, the vehicle could be a collateral. It could be your house as a collateral. Even if you was getting a line of credit or something of that sort, and you're getting cash or whatever, but still they're using the home as collateral. However, they extended your credit, and they will affect your score. And I guess if you was actually maybe getting a lien on your title at a car loan or a payday lending loan or something of that sort, where they're using something that you have as collateral, if they pull your credit, yes, it still would affect your score. Okay, the only way it wouldn't affect your score, basically, if they didn't not pull your credit at all and just gave you, which is probably be something a little bit illegal, using some strong arm to use some type of asset that you have and extend a loan to you. But then, of course, that wouldn't affect the credit score or your credit if they did not process application. Okay. All right. Improving credit. There's many ways to improve credit, but I'm just going to highlight just a few here. Pay the bills on time. When you're talking about the ABCs, I've continued to talk about ABCs. It's very simple. Pay your bills on time. And so to improve your credit, you're going to pay bills on time. We're going to spend a little bit of time on keeping the credit card balance to less than 30%. We're going to have another slide on that. Before that is pay down the balances. And so when I start talking about the balance, the balanced credit usage, balanced credit usage is also the types of credit, but also paying down those balances. Do not allow those balances to be over 50%. Get them down below 50% as soon as you possibly can, and then work to keep them below 30%. So it's as you can work on that. I'm not saying immediately go and cut them all down to 30%. Use it as a goal to keep them at 30. If you're just now starting to use credit cards or revolving credit, if someone extend a line of credit to you or a credit card and it's $1,000 on that credit card, condition yourself to only use $300. Condition yourself to only use $300. If you continue to use your credit wisely, someone else they're going to increase your limit. And so if they increase your limit to $2,000, then condition yourself never to use over $600. One is trying to improve your credit score. If you're trying to maintain your credit, then it's okay to pay the full balance before the cycle date. That's when the interest is added at the end, each cycle date. That's when the interest is added on a paid balance. And so you're wise. You're not trying to raise your credit. You're just trying to maintain good credit. Is pay that bill off before interest is added. Use the card, pay it off. Use the card, pay it off. You're maintaining good credit. It will not have a major impact on increasing the score, but you will maintain good credit. If you're trying to build your credit, you're trying to drive your credit score up. The credit is about your reputation. And so to build that reputation, you actually have to use the credit, more than 30% if possible, and make regular payments. Pay as agreed. Pay on time, if not pay early, and always pay more than a minimal balance, okay? And so if you're trying to drive your score up, do you use that 30%, 30% of that credit, and then make a payment over 60, 90 days and pay it off? Or if it's a larger amount, no more than about 4 to 5 months or so. Pay it down and make major regular payments. And so that having that reputation, showing that you have very good use of credit, this is going to impact your score and make your score go up. Don't apply for more credit. Basically, if you don't need it, don't apply for it. Do not apply for credit if you don't need it. Only when necessary. You do need, if you don't use credit, you're not going to have a score at all. And so you do have to use credit, because at some point in time, you may not need to go out to finance a car, or you may not need to finance a house today, but you will in the future. And so it's good to actually have to use credit, use it sparingly. If you you can I would say, use a major card, a major credit card, use the card to get an oil change and then pay the bill off in a couple of months. Use the card to purchase gas, bill it up no more than 30% and then pay it off. Just go through the exercise of getting 30% on the card and then paying it off in 2 to 3 months. These steps, do that annually. Do not let the card sit for 1 year without using it at all, but use the card annually, a couple of oil changes, a purchase, pay it off in 2 to 3 months. You will see that your score will increase. Of course, if you do it multiple times throughout the year, paying the bill down aggressively, you will see your score increase. Never co-sign. Now, it says improving credit. This is one, probably a chance of you not damaging your credit or someone damaging it for you is co-signing for someone. So never co-sign any financial obligation for a family or friend. Those are the ones that usually come ask you. Some business partners may ask you to co-sign, but do not co-sign. It is dangerous. Regularly review your credit report for errors. They cannot remove information that is not yours. Information that is correct will stay on your credit report. But if there is an error or something that's incorrect or inaccurate, then you want to correct it. If it is an error, errors can be removed. Get credit for making utilities and cell phone payments. And I think I have a slide on that. And so we would like for you to start. If you do not have credit, you need to build your credit. That's one of the things that you can do now is actually start getting reporting your utility payments and cell phone bill payments and rent as well, so that you can get start building your credit. Okay. Credit utilization. This is the 30% here. We show that 35% is for your credit history. That's basically paying on time. And then 30% is actually the amount that you have on the card. Okay. I mentioned about the boosting your credit score. And so Experian have a boost on the credit score where you can actually go in and ID and password, open up an account with Experian. What it would do is actually link to your bank account. It will link to your bank account and actually it will be able to see the utility bills that you have payments there. And so once this link is done with your bank account and the consistency of making those payments on utilities, then it will actually feed information to Experian where it will impact your score. Again, this is a free boost. And for what my experience here is just within the first time that you use it, if you actually have multiple payments on utilities in reference to your phone, electric, and internet, I've seen at least a minor boost on the score immediately. Once it is linked, sometimes the accounts are not linked, but once it is linked, you will see a boost on your score. Now we'll move to safeguarding. Safeguarding personal information. Be alert of impersonators. There's individuals that are calling, trying to ask you for information that you should not give on the phone in reference to your date of birth and social security number and things of that sort, when it's have not made it clear if it's someone that you have a credit relationship with. So be careful about giving that information on the phone. Is safely dispose of the information like your bills, utilities, of course, a copy of credit report and things like that. Putting it into the recycle bin is not advisable. So make sure that you properly dispose of those things. Be careful with passwords. Of course, I'll be telling you about going into the annualcreditreport.com to get a free credit report, also to your banking accounts and things of that sort. Ensure that you often change your password and make sure that you safeguard those. Be aware of phishing emails that are and phishing phone calls as well. Phone calls will call and ask you. Sometime I got a phone call and they asked me, "What number did I just dial?" I was like, you just dialed the number, so what number did you dial? And so be careful on giving that information out in reference to the phone calls. And during the time that we're experiencing now, it's more opportunity for individuals to take advantage or try to take advantage of you in scams. When we're mentioning at the end, we do have a next class coming up in reference to scams. So be careful with that. Then another thing is to be careful on internet, what you do on the internet, leaving accounts open, and also if you're visiting public places on their Wi-Fi. So there are some things that just to be cautious of and safeguard. Always pay bills on time, balance credit usage, and check your credit. That's our next poll question. During COVID-19, how often can you get a free credit report? How often can you get a free credit report during COVID-19? You can respond on Facebook Live, or you can respond on Zoom.
I think we're locked in on Zoom, Larry. We got like a 50-50 split between weekly and annually right now.
Okay. Well, I'm glad that we have that, because more than likely some have been paying attention that I mentioned to check your credit annually. And so prior to COVID-19, I mentioned since 2003, where the Fair and Accurate Credit Transaction Act allowed us to pull our credit and get our credit report from the 3 credit reporting agencies annually. And so I encourage individuals to check their credit annually. During this time, I asked the individuals spread the time out, basically check it every 4 months, really. You check Experian, say in April, you check Equifax in August, and then December you check TransUnion. That way you can spread it throughout the year to keep a good lookout on your credit. Well, we're in COVID-19 now, so the correct answer is going to be weekly. Weekly, check your credit weekly. You can go to annualcreditreport.com, and they allow you to check all 3 of those credit reporting agencies weekly. And again, that website is annualcreditreport.com. If it's your first time pulling your credit, you may not answer some of the questions correctly. And if you do not, then they will lock you out. You can actually make a phone call, but you can also print the application out on the site and mail the application in. They will send you a credit report. And then in the future, when you go back on, you use your credit report to help you answer some of those questions. It may ask you a date and time that you open up an account, or the balance on our account, or something of that sort. With that, with you pulling your credit report and having a hard copy that you can save PDF, of course, then you'll be able to help you answer those questions. So during COVID-19, start pulling your credit weekly. Okay. In reference to that credit report, is that there's a moratorium on rent, also a moratorium on mortgage payments. And so your credit score should not be impacted because you have not made a rent payment. Your credit score should not be impacted because you did not make a mortgage payment during the moratorium. And so the sooner you find that something may appear on the credit report that is inaccurate, to have it corrected, the better chance that you're going to protect and, from your score or your history being damaged over a period of time. And so check your credit report weekly during the pandemic. And remember those, always pay bills on time, balance credit usage, and check it weekly. Check your credit weekly. What can you do to minimize the impact of COVID on your credit standings? Right now, we ask you to talk to a lender, creditor, or housing counseling agency. And so talk to a housing counseling agency. If you have cold feet in reference to talking to lenders or your creditors, well, a housing counseling agency is going to coach you in a manner to help you be able to talk to those creditors. And in some case, the housing counselor can speak on the phone on your behalf and with you as well. But again, I advise you to link with a housing counseling agency during this time so that you can start communicating with your lenders and creditors. Pay what you can. You're showing an effort. And so during this time, if you can't pay even if it's your rent or your mortgage, if you can't pay it all, pay some. And definitely some of the other creditors, pay some if you can't pay all. In reference to what you should pay and what you shouldn't pay. Those, we mentioned about the collateralized loans, such as your car and your house. If it's collateral, and if you're not making those payments once the moratorium is removed, then that collateral is going to be collected. And so they're going to come and repossess your car. They will come and foreclose on your home. So if you got a property that is collateralized, so definitely think hard in reference to paying those payments on those particular creditors. And of course, if you're not paying your rent, there's a good chance you'll be evicted once the moratorium is removed. So think about your shelter, your food, and also the transportation. You want to make sure that those payments are made. Some of the things that are not collateralized, such as your unsecured loans, such as credit cards, if you're going to miss a payment, then that's probably the one that you want to consider. Those things that are not collateralized. But do not ignore the creditor. You want to communicate with them and let them know that and I'm going to give you an example of a statement that you can also put on your credit report and things that you can actually call the creditor and say. Stay up to date on your credit report weekly, okay? And consider adding a consumer statement to your credit report. This is an example of a statement that you can actually have added to your credit report. I personally have not for this particular situation, but have had statements added into credit reports for things that have actually happened. Okay, I didn't make a payment. Okay, I'm 30 days late, but this is the reason why. Okay, and so put the reason why you was 30 days late, and so that makes a difference. And so a creditor pull your report and see a 60-day late out there. You have a statement there. It makes a difference. This is an example. Yes.
Good question. Who do you go to make this statement? Do you go through the 3 bureaus or do you go to the actual holder of your account?
You actually, if you go to annualcreditreport.com, you can do an inquiry on the site and enter a statement there. Okay. Yes. You can write in with a letter to the credit reporting agency to have a statement entered in. They can enter a statement for you as well. But on annualcreditreport.com, you can actually enter your own statement. In this statement here, it says, be advised that the negative accounts on my credit report are related to